Welcome to the Deep Dive. Today we're going to be looking at value investing and also the services offered by AU Small Finance Bank.
Okay.
You've given us a really interesting mix of sources for this deep dive. A detailed overview of AU Small Finance Bank's products and services, and also some excerpts and discussions around The Intelligent Investor by Benjamin Graham, which is kind of the Bible of value investing.
Right.
So we're going to try to extract the key insights from each and help you to understand not only what these topics are about, but why they matter to you.
Sounds good.
All right, so let's start with AU Small Finance Bank.
Okay.
One of the things that jumped out at me right away from the material is that they offer banking services through WhatsApp.
Oh, wow.
WhatsApp banking.
Interesting.
So that seems very relevant to
Yeah, definitely.
our busy lives these days.
Yeah, that's a really interesting way to bridge the gap between traditional banking and the digital age. And I think this focus on accessibility and convenience is going to really appeal to a broad customer base, especially those who are, tech savvy.
For sure. And it goes beyond WhatsApp, too.
Okay.
They've got missed call banking. They've got chatbot assistance through something called AURO.
Right.
And they have a dedicated mobile banking app.
Yeah, you can really see their commitment to digital transformation there.
Mm-hmm.
And that's something that we're seeing a lot across financial institutions these days, right?
Yeah.
They're really leveraging technology to streamline services and just make the whole experience better for the customer.
Yeah. Makes a lot of sense. So going beyond just the technology aspect,
Sure.
AU Small Finance Bank has this really wide range of products and services.
Yeah.
I mean, they have the standard stuff that you would expect, your savings accounts, your current accounts, your
Yeah.
fixed deposits.
Right.
But their specialized offerings are
Yeah.
kind of where things get interesting.
Yeah, I noticed that they have a really tailored approach to different segments of their customer base.
Yeah.
So, like they have these AU Royale accounts with premium benefits,
Mm-hmm.
and accounts designed for women and senior citizens,
Right.
and even a Keyzon savings account specifically for farmers.
Yeah.
It seems like they're really trying to understand and meet the unique needs of their diverse customer base.
Yeah, for sure. And even their loan portfolio goes beyond just, your typical home loans and car loans. They're
Okay.
offering loans for commercial vehicles, tractors, even construction equipment.
Mm-hmm.
So it sounds like they're targeting a broader market than your average bank.
Yeah, it seems like a potential growth strategy to me. By offering these financial solutions for industries like agriculture and construction,
Mm-hmm.
they're tapping into some sectors that are really vital for economic development.
For sure. And then they also have this 0 to 1 program,
Okay.
which is targeted at startups.
Yeah.
And they have specific programs for doctors, agribusinesses, pharma companies.
So they're really committed to supporting entrepreneurs and these specialized businesses.
Yeah, it seems like it.
That's really smart, especially in such a, rapidly evolving economy.
Mm-hmm.
Empowering these segments allows them to contribute to innovation, and it could potentially generate a really loyal customer base.
Right. And, they don't stop there. They also provide insurance investment opportunities, including ESG mutual funds,
Oh, wow.
and even resources like financial calculators and blog articles covering topics like taxation and remittance.
Yeah, so they're really going beyond just basic banking needs there.
Yeah.
It seems like they're committed to becoming a comprehensive financial partner for their customers.
Absolutely. So I guess before we move on to the intelligent investor,
Yeah.
I just wanted to ask you what aspects of AU Small Finance Bank kind of stood out to you the most?
Okay.
And do any of their offerings resonate with your current financial needs or spark an interest that you'd like to maybe explore further?
Well, I think,
Take a moment to consider how their services might align with your own financial goals.
yeah, I think what really stood out to me is how they're catering to these niche markets, and then also their commitment to digital solutions.
Yeah.
I'm always on the go, so having access to banking through my phone is a huge plus.
Mm-hmm.
And then the fact that they're supporting, specific groups like farmers and women entrepreneurs,
Yeah.
it just shows that they're not just focused on profits, but also on making a positive impact.
Right.
So that definitely resonates with my values.
Awesome.
Yeah.
All right, so now let's shift gears a little bit and dive into the world of value investing through the lens of Benjamin Graham's The Intelligent Investor.
All right, let's do it.
This book is considered like the cornerstone of value investing, and even Warren Buffett credits it with shaping his investment philosophy.
Yeah, it's a classic for a reason.
Mm-hmm. So The Intelligent Investor, it's considered this, classic book. But can you give us a quick breakdown of just like the core principles of value investing.
Yeah, absolutely. So at its heart, value investing is really about identifying stocks that are currently undervalued by the market.
Mm.
So that means a company's intrinsic value, like its true worth based on its fundamentals, is higher than its current trading price.
So it's like discovering hidden gems in the stock market.
Exactly.
Oh,
Stocks with the potential to be worth more than what they're currently priced at.
okay.
And it's important to remember that, this is a long-term strategy.
Hmm.
This isn't about, chasing quick profits or timing the market.
Right.
Value investors, they seek out businesses with solid fundamentals, and they believe that they will grow in value over time.
Hmm.
They're patient, and they're willing to hold those investments even if the market doesn't immediately recognize their worth.
Got it. Patience is key.
Absolutely.
All right. So the intelligent investor, it's full of wisdom, but let's try to highlight some key takeaways that might resonate with our listeners today.
Okay, sure.
Um, I think a great place to start is with Graham's, Mr. Market analogy.
Right.
Um, he personifies the market as this kind of emotional being
Yeah.
that's prone to, swings and mood changes and
He's a fickle character.
yeah.
Yeah.
So it's like, that unpredictable friend who's either like overly excited or like super pessimistic.
Exactly.
Okay.
And Graham's point is that intelligent investors shouldn't be swayed by these, short-term fluctuations.
Right.
Instead, they should focus on the businesses that they own and their underlying value, not the daily market noise.
So that's where the concept of margin of safety comes in, right?
Exactly.
I feel like I hear that term a lot in investing.
Yeah, margin of safety is central to Graham's approach.
Mm-hmm.
And it basically means buying stocks at a significant discount to their intrinsic value.
So it's like finding a really good deal on something that,
Mhm.
is valuable.
That's a perfect analogy.
Yeah.
It's like, finding a high quality item for a steal you're paying less than it's actually worth.
Right.
And that gives you this cushion if your assessment of the value was, a little bit off.
Mm.
This margin of safety, it protects investors from potential losses, especially during, periods of market volatility.
Okay, so it's about finding those companies that are potentially undervalued and then buying them at the right price
Yeah.
to kind of minimize the risk.
Exactly. And another key takeaway from the intelligent investor is the importance of focusing on the business itself, not just the stock price.
Mm-hmm.
Graham emphasizes that stocks represent ownership in a company.
Mm-hmm.
And so intelligent investors should understand the business, its fundamentals, its long-term potential, not just fixate on, those daily price movements.
So it's about being a business owner, not just like a stock trader.
Exactly.
Yeah.
Looking for a company you believe in and are willing to hold for the long term.
Got it. So we've got Mr. Market, we've got margin safety, and then really understanding the business that you're investing in.
Right.
What else should we highlight from Graham's wisdom?
Well, one more crucial takeaway is his emphasis on patience. Value investing is a long game.
Oh.
It demands a long-term perspective and the ability to withstand those market ups and downs without making, rash decisions.
So you're sticking to your strategy even when the market is like super volatile
Exactly.
and not letting fear or greed dictate your choices?
Exactly. It's about having conviction in your research and the emotional resilience to, ride out those market storms. That's really what differentiates an intelligent investor from a speculator.
Mm-hmm.
They're in it for the long game, not the quick profit.
It makes you think, does this Mr. Market analogy resonate with you? How comfortable are you with the idea of, long-term investing?
Yeah.
Holding stocks for years without being swayed by, short-term market swings. Think about how these concepts align with your own, investment philosophy.
Right.
I think it's a good point to pause and reflect.
Yeah, definitely. And, while these concepts come from Graham's teachings, decades ago, their relevance in today's market is still widely debated. Some argue that Graham's principles are outdated, especially with the emergence of these high-growth tech companies and, the influence of factors like quantitative easing.
Yeah, it does feel like we're in a different financial landscape now.
Right.
With, traditional valuation metrics maybe not capturing the full picture. But then on the other hand, those core principles of focusing on intrinsic value, having a margin of safety and maintaining that disciplined long-term perspective,
Yeah.
they seem more important than ever.
Yeah, you're right. Ultimately, regardless of, what era we're in, a company's value is tied to its ability to generate profits and create long-term shareholder value.
Right. It's about looking beyond the hype and analyzing, a company's fundamentals,
Hmm.
their competitive advantages, their resilience to withstand, economic challenges?
Exactly. And, it's important to note that value investing doesn't exclude high growth companies.
Hmm.
It's about finding companies trading at a discount to their intrinsic value, regardless of their industry or growth trajectory.
Right.
I mean, a tech company with, massive potential could be a value stock if its price is significantly lower than its true worth.
Mm.
So the key is thorough research,
Yeah.
assessing the company's fundamentals, and determining if its current price represents a good value proposition.
So bringing it back to AU Small Finance Bank,
Mm.
we explored their services, everything from digital banking to these specialized loans and investment options.
Right.
Um, how do you see the connection between their offerings and, these principles of value investing?
That's where it gets interesting. On the surface, a modern bank and a classic investing philosophy might seem like separate worlds.
Right. It's like comparing apples and oranges. They're both fruit, but
Yeah.
they're very different.
Exactly. But there are these intriguing connections.
Okay.
For example, AU small finance banks focus on providing financial solutions for specific segments like farmer, women entrepreneurs, or
Right.
startups.
Right.
That aligns with that value investing principle of understanding the business.
So by catering to these like niche markets, AU is demonstrating a deep understanding of their needs, their challenges, their growth potential.
Precisely. And this aligns with, the value investing approach of researching a company,
Hmm.
understanding its operations, and assessing its long-term prospects. It's about, looking beyond the surface and evaluating that underlying value.
It's a fascinating connection.
Yeah.
It's like they're applying a value-oriented lens to their product development and their market strategy.
Exactly. And, for investors, AU Small Finance Bank is a publicly traded company. So the principles of value investing can absolutely be applied to assess, whether investing in their stock makes sense.
So someone who's interested in potentially investing in, AU Small Finance Bank
Right.
could use, Graham's principles to analyze their financials, their
Yeah.
growth prospects,
Mhm.
whether their current stock price offers like a good value proposition.
Exactly. The beauty of these principles is that they can be applied to a wide range of investment decisions.
From individual stocks to, entire companies.
It's like having this mental toolkit
Yeah,
that you can use to navigate the financial world,
exactly.
Yeah.
and assess risks, evaluate opportunities, and just make more informed decisions overall.
That's what the intelligent investor is all about.
Yeah.
Empowering individuals to take control of their financial destinies and make sound decisions
Mm-hmm.
based on, logic and analysis, not emotions and speculation.
I can see why Warren Buffett considers it, the best book on investing ever written.
Yeah.
It's not just about, formulas and ratios. It's about developing a mindset,
Mm-hmm.
a way of thinking about investments
Absolutely.
that can really benefit you throughout your life.
It's about becoming an intelligent investor, someone who understands that the market isn't always rational,
Right.
that price and value can differ, and that, patience and discipline are essential for long-term success. So we've explored AU Small Finance Bank. We've delved into Benjamin Graham's wisdom and connected these seemingly, separate topics.
Right.
Now, before we move on to the final part of our deep dive, where we take a closer look at the concept of intrinsic value and how it applies to both individual stocks and even AU Small Finance Bank itself,
Okay.
I want to hear your thoughts. What insights from this conversation have really resonated with you so far?
Well, I think what stood out to me is how these timeless principles from The Intelligent Investor can still be applied today, even in this rapidly changing financial landscape.
Mm-hmm.
And it's fascinating to see how a company like AU Small Finance Bank is embracing innovation and technology while also staying true to those core principles of, creating value and serving their customers.
Yeah, it's a powerful combination.
Absolutely. And as we explore intrinsic value further, I encourage everyone listening to consider how these principles can be applied to their own financial decisions.
Mm.
Whether they're evaluating investment opportunities or simply managing, their day-to-day finances.
Yeah, I think that's a great point to kind of segue into the next part of our conversation.
Absolutely.
All right, so we've talked about value investing in AU Small Finance Bank,
Mm-hmm.
But now let's really zero in on this concept of intrinsic value.
Okay.
It sounds a bit intimidating,
Yeah.
like something that maybe only financial experts understand.
I get that.
Um,
It can seem complex at first, but it's really a fairly straightforward concept.
okay, so break it down for us.
Right.
What exactly is intrinsic value and why is it so important for investors?
Well, simply put, intrinsic value is the true worth of an asset,
Mm-hmm.
based on a thorough analysis of its fundamentals.
Okay.
It's about figuring out what a company is actually worth, regardless of its current market price, or the whims of Mr. Market, as Graham would say.
So it's like looking beyond the sticker price
Yeah,
to figure out something's real worth
exactly.
based on its quality, its features, its potential.
Just as you wouldn't buy a house without considering its value beyond the asking price.
Right.
Intelligent investors shouldn't buy stocks without assessing their intrinsic value.
That makes sense for stocks, but, how does intrinsic value apply to AU Small Finance Bank?
Hmm.
I mean, they offer services, not just a stock.
Well, while AU Small Finance Bank is publicly traded and has a stock,
Right.
the concept of intrinsic value can also be applied to the bank itself.
Okay.
It helps us assess its overall financial health, its growth potential, and its ability to generate long-term value for its shareholders.
So we're looking at the whole picture,
Exactly.
their assets, their earnings, their customer base, their strategic direction
Mm-hmm.
to evaluate, the bank's underlying worth.
Precisely. And this is where it gets interesting because AU Small Finance Bank has these unique characteristics that contribute to its intrinsic value.
Okay, so what are some of those characteristics that stand out to you?
Well, their focus on digital banking and innovative use of technology like, WhatsApp banking
Mm-hmm.
shows they're adapting to changing customer needs and staying ahead of the curve in a rapidly evolving industry.
So it shows they're not stuck in the past and they're committed to improving that customer experience.
Exactly. Their commitment to financial inclusion through specialized products for farmers,
Right.
women entrepreneurs, and underserved communities also contributes to their intrinsic value.
Mm-hmm.
They're expanding their market reach and making a positive social and economic impact.
So it's like they're weaving social responsibility into their business model.
Absolutely. And their diverse loan portfolio, which includes financing for commercial vehicles, tractors, and construction equipment,
Mm-hmm.
demonstrates their commitment to diversifying revenue streams and catering to a broader range of customer needs.
It sounds like they're not putting all their eggs in one basket,
Yeah.
and they're strategically positioning themselves for growth in, various sectors.
Right, and their expansion into areas like insurance investment products and financial education further strengthens their intrinsic value by providing a comprehensive suite of services for their customers.
It's like they're building this financial ecosystem
Yeah.
that supports a customer throughout their various life stages and needs.
This holistic approach, combined with their focus on technology and financial inclusion, suggests that AU Small Finance Bank is well positioned for long-term growth and value creation.
So to bring it back to, Benjamin Graham,
Yeah.
even though AU Small Finance Bank might not be a traditional, undervalued value stock,
Right.
their business model, their strategic direction, their commitment to creating value for customers and shareholders,
Mm-hmm.
it all kind of aligns with, intelligent investing principles.
That's a great point. Value investing isn't just about finding cheap stocks.
Mm-hmm.
It's about identifying companies with strong fundamentals, sound management, and a clear vision for the future.
So as we wrap up this deep dive, what are some key takeaways that our listeners should keep in mind?
Well, whether you're considering investing in a particular stock, choosing a bank, or making everyday financial decisions, the principles we've discussed can help you make more informed strategic choices.
So don't be afraid to do your research.
Exactly.
Ask questions and really determine the true value of what you're considering.
Remember, price is what you pay,
Mm,
but value is what you get.
I like that.
And as Benjamin Graham emphasized, investing in your financial literacy is crucial.
Yeah.
Keep learning, keep exploring, and develop the confidence to navigate the world of finance.
So that's the key to financial well-being.
Absolutely.
Understanding the fundamentals, making informed choices, and building a future that aligns with your values and aspirations.
Well said.
Awesome. Well, thanks for joining us on this deep dive.
Yeah, thanks for having me.
We hope this conversation has encouraged you to, continue exploring the world of finance and making smart financial decisions.
Absolutely.
Until next time. All right, so today we're looking at something a little different.
Okay.
A bit of an odd pairing, you might say.
Yeah.
We're going to dive into AU Small Finance Bank.
Okay.
They're a big player in India's financial world,
Right.
but we're also going to tie that into the world of value investing,
Interesting.
and specifically through the lens of Benjamin Graham's book,
Mhm.
The Intelligent Investor.
Okay. Yeah.
Now, you might be thinking,
Yeah.
what does a pretty modern bank have to do with a book that was written way back in 1949?
Right. Yeah. Seems like a bit of a stretch.
But stick with us.
Okay.
Because I think we're going to uncover some really interesting connections here.
Yeah, right.
about how some pretty old school investment wisdom can still be
Yeah.
super relevant today.
Well, it's fascinating to me how these two worlds that seem so separate
Yeah.
actually do share some pretty fundamental principles.
Yeah.
I mean, whether you're picking a savings account or trying to decide where to invest, your hard-earned money,
Hmm.
it really all comes down to making smart, informed choices.
Absolutely. So let's start with AU Small Finance Bank.
Okay.
Just from the materials you've shared with me,
Yeah.
it's clear that they're not just your typical, you know, basic bank, right?
Right.
They offer everything from like checking and savings accounts
Yeah.
to loans for vehicles,
Mm-hmm.
even gold.
Wow.
They're even into insurance and mutual funds.
It's
It's almost like a financial supermarket, right?
It's like a one-stop shop for all your financial needs.
Yeah.
And what really stands out to me is their focus on digital banking.
Oh, yeah.
They've got net banking, WhatsApp banking, even a chat bot named
Wow.
AURO.
Really? A chatbot?
Yeah.
Wow.
It's like they're really catering to a customer who's comfortable, living in the digital world.
Yeah, that digital focus definitely caught my eye, too.
Yeah.
And it makes you wonder, like, does that change how we evaluate a bank?
That's a good question.
Like AU Small Finance Bank.
Yeah.
I mean, are traditional financial metrics enough anymore?
Right.
Or do we have to start factoring in, their tech game as well?
I think that's a great question, and it really gets to the heart of how we value businesses in today's world. Things are changing so fast.
Mm-hmm.
And that's where looking back at something like The Intelligent Investor
Yeah.
can be surprisingly insightful.
Yeah.
Even though Graham was writing decades before the internet,
Right.
His core ideas about how to evaluate a business are still incredibly relevant.
Okay, so let's time travel back to 1949 for a minute.
All right.
What exactly is The Intelligent Investor about?
Okay.
And why is it considered, such a big deal in the investing world?
Well, this book is basically considered the Bible of value investing.
Okay.
And it's all about cutting through the hype and really looking at the underlying worth of a company. Graham's not interested in get-rich-quick schemes, or following the latest market fads.
Right.
He's all about finding those hidden gems. The companies that are trading for less than their intrinsic value.
Okay, so like what they're actually worth.
Exactly.
So it's kind of like finding like a designer dress at a thrift store.
Yeah.
It might be hidden amongst a bunch of, other stuff,
Right.
but that its real value is way higher.
That's a perfect analogy.
Okay.
And Graham has this really brilliant way of explaining, this whole idea of intrinsic value versus market price.
Okay.
He asks you to imagine the stock market as this guy named Mr. Market.
Moopster market.
And Mr. Market is kind of an emotional character,
Okay.
prone to these wild mood swings.
Right.
Some days he's super optimistic, offering you these ridiculously high prices for your stocks. Other days he's a total downer, practically begging you to sell at a loss.
Oh, man. Okay, I'm starting to see where this is going.
Yeah.
So the key is to not get swept up in Mr. Market's drama.
Exactly.
Right.
The intelligent investor doesn't let Mr. Market dictate their decisions.
Okay.
They know that Mr. Market's just reflecting, the whims of the crowd, the short-term noise. Instead, they focus on their own research, their own assessment of a company's true worth.
Right.
They buy when Mr. Market is being irrationally pessimistic.
Yeah.
And they might even sell when he's being overly optimistic.
That's starting to make a lot of sense.
Good.
So how do we actually figure out this intrinsic value thing?
Right.
It sounds like it's more than just looking at the, current stock price.
It absolutely is.
Right.
Graham, he provides some formulas to help estimate intrinsic value based on things like a company's earnings and assets.
Okay.
But he also emphasizes that it's not just about plugging numbers into a formula.
Right.
You really need to understand the business,
Yeah.
its industry, its management team.
Yeah.
It's a holistic assessment.
So it sounds like detective work almost.
It is.
You're piecing together clues from their financial statements, the company's operations,
Yeah.
even its leadership.
Yeah.
So even though Graham's formulas,
Yeah.
might need a little updating
Right.
for the digital age,
Yeah.
that fundamental approach to research is probably more relevant than ever, right?
Absolutely.
Would you say?
I would.
That-
And there's another key concept from the intelligent investor
Okay.
that's especially crucial in today's, kind of volatile market.
Yeah.
It's this idea of a margin of safety.
Okay. Let's unpack that. What does that mean in practice?
Okay, so think of it like buying a used car.
Okay.
You wouldn't just pay the seller's asking price
Right.
without factoring in, potential repairs.
Right.
Right. That buffer you build in is your margin of safety.
Oh, yeah.
It's protecting you from unforeseen expenses.
Mm-hmm.
And investing, it's the same concept.
Yeah.
You want to buy a stock
Yeah.
at a price significantly lower than its intrinsic value.
So it's like a built-in discount
Exact.
to protect you from, the inevitable market ups and downs.
Yeah.
Kind of like having an emergency fund for your investments.
I love that.
Yeah.
That's a great way to put it.
Okay.
It's about being prudent,
Right.
recognizing that you can't predict the future with 100% certainty.
Right.
Yeah. Things happen.
Exactly. This is making me think about how we approach, just like basic things like savings accounts or loans.
Right.
It's so easy to get caught up in like the marketing hype.
Oh, yeah.
But maybe we should be thinking more like value investors.
Absolutely. I think these principles apply even when you're not picking stocks.
Okay.
Like, imagine you're comparing savings accounts at
Yeah.
AU Small Finance Bank.
Mm-hmm.
You might be tempted by the one with the highest interest rate.
Right. Just go for the biggest number.
Right, exactly. But a savvy value investor would dig a little deeper.
Okay.
They'd be looking at the fees,
Mm-hmm.
the minimum balance requirements.
Right. All the fine print.
all that stuff, exactly.
Yeah. Not just chasing the flashy number.
Yeah. It's like those buy one, get one free deals,
Right.
Sometimes the price of that first item is inflated to cover the cost of the free one.
Oh, yeah, that's true.
Yeah.
So it's about being a smart consumer,
Yeah,
even when it comes to something as basic as a savings account.
precisely. And let's say you're considering a loan
Okay.
from AU Small Finance Bank.
Mm-hmm.
A value investor wouldn't just jump at the offer with the lowest monthly payment.
Right.
They would look at the total cost of that loan
Yeah, over the life of the loan.
over its lifetime,
Yeah.
factoring in the interest rates, the fees, all of that.
Right. So making informed decisions, not just impulsive ones.
Exactly.
And that brings us back to, that emotional discipline piece,
It does.
doesn't it?
Yeah.
It's so easy to get caught up in the excitement of, a new car or a dream vacation.
Yeah.
But we need to be thinking long term.
Right. And that's where Graham's wisdom, I think, really shines.
Yeah.
He understood that human beings are not always rational,
Especially when it comes to money.
especially when it comes to money.
Right.
We're influenced by fear, greed, all sorts of cognitive biases.
Yeah, we let our emotions get the best of us.
We do.
Okay, so how do we actually apply this to AU Small Finance Bank?
Okay.
Let's say we're looking at them as a potential investment now,
Right.
not just a place to get a loan or a savings account.
Yeah.
How would we put on our, intelligent investor hats?
Okay. Well, just like with any company, we'd start by digging into their financials.
Okay.
We look at their earnings growth, their return on equity, their debt levels, all those key metrics that tell us about their financial health,
Right.
but we wouldn't stop there.
Okay. So we'd want to understand their competitive landscape.
Exactly. How are they positioned
Yeah.
in the Indian banking market?
Mhm.
Who are their main rivals?
Yeah. What are their strengths and weaknesses?
Precisely. We'd also want to look at their management team.
Okay.
Are they competent?
Are they ethical?
Are they ethical? Do they have a clear vision for the future?
So it's like we're building a puzzle,
Yeah.
piecing together information from all these different sources to try to get a complete picture.
That's a great analogy. And remember, we're not just looking for positive information.
Right.
We also want to identify potential red flags.
Okay.
Anything that might, make us question the bank's long-term prospects.
So we're looking for that margin of safety,
Yeah.
that buffer
That buffer.
that protects us from the unforeseen risks.
Exactly. It's about being cautious,
Yeah.
not just optimistic.
Right. Okay.
And here's where AU Small Finance Bank's digital focus, I think, becomes really interesting.
Okay.
On the one hand,
Yeah.
it's clearly a strength.
Right.
They're attracting tech-savvy customers.
Mm-hmm.
They're reducing their overhead costs.
Yeah.
They're positioning themselves for growth in this rapidly digitalizing world.
Right. But on the other hand, there are risks
There are,
associated with, any new technology,
of course.
cybersecurity threats, platform glitches,
Mm-hmm.
even just, the possibility that their tech becomes outdated.
All valid concerns.
Yeah.
And a value investor would want to understand how AU Small Finance Bank is mitigating those risks.
Okay.
Are they investing in robust security measures?
Mm.
Are they agile enough to adapt to new developments?
So having that intelligent investor mindset is so valuable.
It is.
It's not about avoiding risk altogether. It's
Ugh.
about understanding it and managing it,
Managing it.
weighing the potential rewards
Yeah.
against the potential downsides.
Exactly. And it's important to remember that even if AU Small Finance Bank checks all the boxes,
Right.
from a value investing perspective,
Yeah.
it doesn't guarantee that there'll be a successful investment.
Right.
You know, the market can be unpredictable. There are
Yeah.
always factors outside our control.
No crystal ball.
No crystal ball.
Even for the most intelligent investor.
Right.
So where does that leave us? We've
Okay.
looked at AU Small Finance Bank through this lens of value investing. We've dug into their financials,
Yeah.
their strategy, their competitive landscape.
Yeah.
What's the big takeaway?
Dive of
What
it.
should our listener be thinking about right now?
Well, I think the biggest takeaway for me is that whether you're looking at AU Small Finance Bank as a potential investment or just, considering them for your basic banking needs,
Right.
this value investing mindset
Yeah.
can really help you make smarter decisions.
I couldn't agree more. It's about doing your research thinking long term,
Yeah.
not letting your emotions cloud your judgment,
Right.
and understanding that a good investment isn't just about high returns. It's about balancing risk and reward.
And that's where things get really interesting to me.
Yeah.
Because we take this thought experiment even further.
Okay.
And imagine like Benjamin Graham himself,
Yeah.
looking at AU Small Finance Bank today.
Yeah.
What do you think his reaction would be?
Oh, that's a great question.
Would he be impressed by their digital innovations?
Or would he be, skeptical of their rapid growth?
That's a question that could spark a whole other deep dive.
Right.
I think he'd be fascinated by how technology has transformed the financial landscape.
Okay.
Remember, he was writing in a time
Yeah.
when getting stock quotes involved literal ticker tape.
I know, it's crazy.
So this world of instant transactions and mobile banking would probably blow his mind.
Right. But would he be a fan? I mean, value investing is all about finding those undervalued,
Right.
often overlooked companies.
Mm-hmm.
Would he see a fast-growing, tech-focused bank,
Yeah.
like AU Small Finance Bank,
Yeah.
as fitting that mold?
Well, I think he would approach it with that same methodical, research-driven mindset
Okay.
that he applied to everything.
Right.
He'd want to understand their technology, their competitive advantages,
Right.
the sustainability of their growth.
Yeah.
He wouldn't just assume that because they're digital,
Right.
they're automatically a good investment.
He'd be looking for the substance behind the flash.
Exactly. Not just chasing the hype.
Right.
And I think he'd be particularly interested in their risk management practices.
Okay.
Remember he was all about that margin of safety, that buffer against the unexpected.
Right.
So he'd want to know how they're protecting themselves from cybersecurity threats, data breaches.
Yeah. All those new risks that come with the digital world.
Exactly.
It makes you realize that even though The Intelligent Investor was written, decades ago,
Right.
it's almost prophetic in a way.
It is.
Graham was warning about the dangers of speculation, of emotional decision-making,
Yeah.
of blindly following the crowd.
Mhm.
And those are all things that are just amplified
They are.
in today's, hyper-connected, fast-paced world.
Absolutely. And that's why his work remains so relevant.
Yeah.
It's not just a set of rules for picking stocks.
Right.
It's a framework for thinking about risk reward.
Yeah.
The long game, it's about developing a mindset that can help you navigate, the complexities of the financial world,
Right.
no matter what new technologies or trends emerge.
So whether you're considering opening a savings account with AU Small Finance Bank, exploring them as a potential investment,
Right.
or just trying to make sense of this ever-changing world of finance,
Yeah.
remember that you have the power to become an intelligent investor,
Yes, you do.
an intelligent consumer,
That's right.
or intelligent steward of your own financial well-being.
Absolutely.
And who knows,
Yeah.
maybe one day you'll find yourself
Yeah.
digging through a company's financials, feeling a little bit like Benjamin Graham yourself.
I hope so.
Well, on that note, we'll leave you to ponder those possibilities.
All right. Sounds good.
Thanks for joining us on this deep dive into the fascinating intersection of value investing and the future of finance. Welcome back, everyone. Ready for another deep dive? Today, we're tackling value investing, and we're going to use that lens to take a closer look at AU Small Finance Bank.
Sounds good.
We've got a mix of sources for this one. Some classic investment advice, a little peek into AU Small Finance Bank's website, and even a review of The Intelligent Investor by Benjamin Graham.
Ah, the Bible of value investing.
Exactly. So before we get into the nitty-gritty of AU Small Finance Bank, let's set the stage. What exactly AU's value investing?
Well, in the simplest terms, it's all about finding those hidden gems in the market companies that are trading for less than they're actually worth.
Okay, so it's like finding a designer dress at a ridiculously low price.
Exactly. Except the dress is a company with huge potential that the market is underestimating. It's called finding undervalued companies.
I like that analogy. But how do you figure out if a company is truly undervalued?
That's where things get a little more complex. A big part of it is understanding the concept of intrinsic value.
Intrinsic value. I think I remember reading about that in the book review.
It's a core idea in value investing. See, the price of a stock on the market, that doesn't always reflect what a company is truly worth. Intrinsic value is all about digging deeper, looking at the company's potential future earnings, its assets, its management. It's about seeing beyond the current stock price.
So it's like assessing a house, right?
Okay.
You don't just look at the asking price, you consider the location, the size, the condition.
Exactly. You're trying to get a more accurate picture of what that house, or in this case, that company, is truly worth. And Benjamin Graham, the father of value investing, he actually came up with a revised formula for calculating this intrinsic value.
Okay, now you're bringing back memories from that book review. It involves some pretty intense calculations, right?
It does get a bit technical, but the core idea is to compare a company's potential for growth to a benchmark that's super stable, like the yield on AAA corporate bonds. Those bonds are considered incredibly safe.
So it's like comparing a race car to a reliable family sedan. One is all about speed and potential, the other is about safety and predictability.
That's a great way to put it. And by making that comparison, you can start to see if the market is underestimating the race car, or in this case, the company's true growth potential.
This is making a lot of sense. But even with all these calculations, there's always a chance you could be wrong,
Yeah.
right? Markets can be unpredictable.
That's where another crucial concept comes in, the margin of safety.
The margin of safety, that sounds intriguing. Tell me more.
It's all about building in a buffer for error, acknowledging that our estimations might not be perfect. So let's say you estimate a company's intrinsic value to be $100 per share.
Okay.
A value investor wouldn't necessarily jump in and buy at $100. They might wait for it to drop to, say, $70 or even $60. That difference is the margin of safety. It's like a cushion in case your calculations were a bit off, or if the market takes an unexpected turn.
So it's like getting a discount on top of the discount. I like the sound of that. But I'm guessing this margin of safety depends on your risk tolerance too, right?
Absolutely. Everyone has a different level of comfort when it comes to risk. Someone with a higher risk tolerance might be comfortable with a smaller margin of safety. But for someone who's more cautious, a larger buffer would make sense.
That makes sense. Okay, so we've got a grasp on some of the key ideas behind value investing. Finding undervalued companies, understanding intrinsic value, and building in that margin of safety. But how does all of this apply to a real-world company like AU Small Finance Bank?
Great question. That's where the real fun begins.
And we're going to find out after a quick break.
Sounds good.
All right, let's roll up our sleeves and dig into those financials. I'm curious to see if AU Small Finance Bank lives up to the principles of value investing.
Sounds good to me. Where do you want to start?
Well, the book review of The Intelligent Investor talked about earnings per share, or EPS. What can we glean from AU's EPS?
Okay, so looking at their EPS over the past few years, we can see it's been trending upwards. That suggests they've been pretty consistently growing their profits.
Okay, that sounds promising. But you mentioned earlier it's not just about the quantity of earnings, but the quality too.
You got it. And that's something you really have to dig into. For example, you want to look at how they're growing that customer base. Is it organic, or are they relying on some risky lending practices? And when they expand into new markets, is it strategic or just chasing quick wins? Those are the kinds of questions a value investor would be asking.
So it's about understanding what's driving those earnings, making sure their growth is built on a solid foundation. Kind of like checking the roots of a tree, right? You want strong roots that can weather a storm.
Exactly. Now, another thing to keep an eye on is their debt level. You don't want a company that's drowning in debt, right? Excessive debt that can really hinder their ability to grow and make them vulnerable when the economy takes a dip.
Yeah, that makes sense. It's like carrying around a heavy weight.
Yeah.
So how's AU doing in that department?
Well, if you look at their debt to equity ratio, which basically compares their debt to their ownership stake, they seem to be in a pretty healthy range, not overly reliant on borrowing to fuel their growth.
Okay, so that's reassuring. It sounds like they're managing their debt responsibly. What else should we be looking at?
All right, let's shift gears and look at something that's like the holy grail for value investors. Return on equity, or ROE. This tells us how effectively they're using shareholders' money to generate those profits.
So it's a measure of efficiency, like how well are they turning investments into actual profits?
Exactly. You want to see a company that can squeeze as much profit as possible out of every dollar invested. And AAU has been pretty consistent in delivering a solid ROE, which suggests their skill at deploying capital and generating good returns for those shareholders.
That's definitely a plus. But remember, numbers can only tell us so much, right?
Hmm.
What about the qualitative side of things, like their management team, their competition, all that good stuff?
You're absolutely right. Those factors are crucial. So let's start with their management team. I mean, a company's leadership can make or break it, right? You want to see a team that's experienced, has a good track record, and operates ethically.
From what I've gathered, their leadership team seems to have a pretty solid reputation in the financial sector. They seem experienced, capable of making sound decisions, and have a good understanding of the market.
Okay, good. Strong leadership is a must-have, especially in such a complex industry. Now, let's think about the competitive landscape. Banking, it's a pretty cutthroat industry, right? Lots of players vying for those customers. So how does AU position themselves amidst all that competition?
Well, they seem to be carving out a niche by really focusing on those underserved markets, particularly in rural and semi-urban areas.
Interesting. So it's like they've found a pond with a little less competition and are making the most of it. But doesn't that limit their growth potential? I mean, if they're only focusing on a specific segment.
That's a good point. It's a trade-off, right? Focusing on depth rather than breadth. So a value investor would need to consider if that strategy aligns with their own investment goals and expectations.
Exactly. And speaking of goals, what about AU's vision for the future? Where do they see themselves going and how do they plan to get there?
Based on their website and some of their public statements, they seem to be laser focused on expanding their reach, both in terms of geography and the types of services they offer. And they're definitely not shying away from technology, investing in new platforms, exploring new ways to serve customers.
Okay, so they're not just sitting back and enjoying the status quo, they're actively looking for ways to grow and adapt to the changing market. That's a positive sign.
It seems like they're checking a lot of the boxes so far. Good financials, capable management, a clear focus, and a forward-thinking approach. But before we get too excited, let's not forget about one of the core principles we discussed earlier, the margin of safety.
Oh, absolutely. Even with all these positive signs, we got to stay grounded. The market's unpredictable and things don't always go as planned. The margin of safety, that's all about acknowledging those uncertainties and building in a buffer.
It's like acknowledging that even with the best map, you might encounter some detours along the way, right? So how would we apply that principle to AU? What potential risks should we be mindful of?
Well, one risk to consider is their focus on those rural and semi-urban markets. While it's a good strategy for differentiation, those markets can be more sensitive to economic downturns or even changes in agricultural policies.
Ah, I see. So a smart investor would want to really analyze those external factors and how they could impact AU's performance, right? Factor that into their valuation.
Exactly. And they'd also need to keep a close eye on the competitive landscape. AU might be doing well now, but what if those bigger banks with deeper pockets decide to enter those markets more aggressively? That could squeeze AU's market share and profitability.
So it's about thinking long-term, anticipating potential challenges down the road. Almost like playing chess, trying to predict your opponent's moves several steps ahead.
Great analogy. Value investing is all about thinking critically, weighing the upside potential and the downside risks. So, where do we land on AU? Could this be a company worthy of a value investor's portfolio?
Well, based on what we've seen so far, AU seems to have a lot going for it. Consistent earnings growth, strong return on equity, strategic focus, but
But there's still some question marks and potential risks that need careful consideration.
exactly. Remember, folks, this deep dive is just a starting point. It's about giving you the knowledge to kickstart your own research journey.
So don't rush into any decisions. Take the time to really dig into AU's financials, study their competition, and weigh those risks and rewards carefully.
And don't forget those key principles. Patience, emotional discipline, and lifelong learning. Those are your guiding stars in the world of value investing.
Couldn't have said it better myself. All right, I think it's time to shift gears and revisit some of those practical tips from The Intelligent Investor, that blog post you mentioned earlier.
Perfect. Let's see how those lessons can help us navigate the ups and downs of the market. So we talked about patience earlier, and that blog post on The Intelligent Investor really hammered that point home. It's easy to get caught up in the market hype and want to see those returns right away, but that's not really the value investing way, is it?
Nope, not at all. Patience, it's all about trusting the process, you know. Understanding that building real wealth through value investing, it takes time. It's like planting a seed. You got to nurture it, give it time to grow. You can't just expect a giant tree overnight.
I like that. It reminds me of that quote, something about the stock market being a device for transferring money from the impatient to the patient.
Oh, yeah, that's a classic. And it's so true. Trying to time the market, chasing those quick gains, it often ends in disappointment. Value investing, it's about identifying those undervalued companies, holding on to them, letting that intrinsic value shine through.
And speaking of emotional roller coasters, let's talk about the next big lesson from that blog post. Emotional discipline. Man, that's got to be one of the hardest things to master as an investor, especially when the market gets all crazy.
Oh, tell me about it. We're all human, right?
Emotions, they can really mess with our judgment. Fear leads to panic selling. Greed makes us chase those hot stocks without doing our due diligence. It's a constant battle.
Yeah, it's like being on a ship in a storm. If you let your emotions take over, you're going to make some rash decisions, steer yourself right off course. But if you stay calm, focused on your destination, you've got a much better chance of weathering that storm.
Exactly.
Hmm.
It's about having a plan and sticking to it, no matter what craziness is happening in the market. Detaching your emotions from those investment decisions. Tough, but essential.
Absolutely. The market, it's always going to have its ups and downs, but your strategy, that should be anchored in solid principles, not your current mood. Couldn't agree more. And that brings us to the last big takeaway from that post. Lifelong learning. The world of investing, it's constantly changing, so we got to stay curious, we got to be adaptable.
Always be a student, right?
Yeah.
There's always something new to learn, some new trend to explore. But for someone just starting out, where should they focus their learning?
Well, I'd say go beyond those headlines, beyond those quick sound bites. Read those classic books, you know, The Intelligent Investor, stuff like that. Follow reputable sources, maybe attend some webinars or conferences. The more you understand how this world works, the better decisions you'll make.
And don't forget to learn from your own experiences too,
Oh.
right? Both the good and the bad. Those are some of the most valuable lessons you can get.
Oh, absolutely. It's about refining your skills, keeping up with the times, never stop learning.
Great advice. So let's bring it all home, shall we? We've explored those core principles of value investing, finding those diamonds in the rough, understanding what they're really worth, managing risk, and we've taken a pretty deep dive into AU Small Finance Bank. We've looked at their financials, their leadership, their competition, their plans for the future.
We've also talked about those essential qualities, the patience, the discipline, that constant drive to learn. Those are the keys to success in the long run.
So as you continue your own research, remember those lessons. Value investing, it's not some get-rich-quick scheme. It's a marathon, not a sprint. It takes dedication, it takes discipline.
And when you're evaluating AU Small Finance Bank or any other company, don't forget those principles. Dig deep, ask the tough questions, make sure your decisions align with your goals, your risk tolerance.
Couldn't have said it better myself. We've given you the roadmap, the tools. Now it's your turn to explore. Embrace the challenge, keep learning, and most importantly, enjoy the journey.
Well said. It's been a pleasure diving into this with you today.
Likewise. Thanks for joining us on this deep dive into the world of value investing at AU Small Finance Bank. We hope you've learned a thing or two. Until next time, happy investing, everyone.
Welcome back to the deep dive. Today we're tackling kind of a fascinating challenge. You've given us The Intelligent Investor by Benjamin Graham, you know, the Bible of value investing.
Right.
But you've also thrown in kind of a curveball with AU Small Finance Bank's website.
Okay.
So our deep dive mission is this. Can we actually apply these 70-year-old investing principles to a modern digital bank in India?
Well, that's a question that really cuts to the heart of, whether value investing is truly timeless or whether it's become kind of a relic of a bygone era.
Okay, so first things first, we need to make sure we've got a solid understanding of what value investing actually is.
Right.
Then we can start exploring AU Small Finance Bank and see if we can connect the dots.
Sounds good.
All right.
So to put it simply, Value investing is about finding those hidden gems in the market,
Right.
stocks that are trading for less than what they're actually worth.
So it's like finding a diamond in the rough,
Hmm.
except instead of a sparkling gem, it's a company with the potential for, serious growth.
Exactly. And the reason these diamonds exist is because the market, well, the market isn't always perfectly rational. Prices can be influenced by short-term news, emotions, even just plain old herd mentality.
So the value investor swoops in, buys these undervalued stocks, and then, crucially, holds on to them for the long haul.
That's right. Patience is key. Value investing is not about chasing quick profits or trying to time the market. It's about recognizing that intrinsic value and believing that eventually the market will catch up.
Now, Graham talks a lot about this idea of mean reversion, which sounds pretty technical.
Yeah.
Can you break that down for us in a way that, even I can understand?
Well, think of it like a pendulum swinging back and forth. The market might overreact in the short term, pushing a stock's price too high or too low.
Ah.
But over time, that pendulum tends to swing back towards the center, towards the stock's true value.
So the value investor is betting on that swing back towards the center.
Precisely. They're essentially saying, I believe this company is worth more than what the market is currently giving it credit for. And eventually, the market will recognize that too.
Now, I'm starting to see how this long-term perspective really ties into the whole value investing philosophy. But how do you actually determine if a stock is undervalued in the first place? Is there some, secret formula?
Well, Graham did develop some formulas for calculating intrinsic value, but he always emphasized that these were just tools, not guarantees.
So no magic bullet.
Afraid not. He believed that thorough research and analysis were crucial. You need to understand the company's business, its financials, its management team, its competitive landscape.
It's about looking beyond the hype and really digging into the fundamentals.
Exactly. And even with all that research, you're bound to make mistakes. Which is why Graham introduced this incredibly important concept, the margin of safety.
Okay, the margin of safety. Now that sounds like something I definitely want in my investing toolkit.
It's essentially a buffer against human error and market unpredictability. By buying a stock at a significant discount to its intrinsic value, you're giving yourself room for error.
So even if my analysis is a bit off, or if the market takes an unexpected dip, I'm less likely to get burned.
That's the idea. The margin of safety acts as a cushion, helping you minimize losses and sleep better at night.
I like the sound of that. Now, you mentioned Graham developed some formulas for calculating intrinsic value. Can you give us a quick, glimpse into how those work?
Sure. His original formula focused on a company's earnings and assets. Basically, it tries to determine the present value of the future earnings a company is expected to generate. He later revised the formula to account for interest rates and growth potential.
I'm not a math whiz, but it sounds like these formulas are all about trying to get a realistic estimate of what a company is actually worth, rather than just relying on the market's, often fickle opinion.
That's the essence of it. And the key takeaway here is that these formulas are starting points, not definitive answers. They're meant to guide your research, not replace it.
Got it. So we've laid out the fundamentals of value investing, finding undervalued stocks, taking a long-term perspective, understanding the importance of the margin of safety. But The Intelligent Investor was written back in 1949. The world has changed a lot since then. How relevant are these ideas in today's market, especially when it comes to a digital bank like AU Small Finance?
That's the million-dollar question, isn't it? And it's what makes this deep dive so intriguing. We're going to take these principles, test them against the realities of a modern financial institution, and see what we discover.
All right, so we've got Graham's wisdom in our back pocket. Now let's step into the world of AU Small Finance Bank. From what I'm seeing on their website, they've got a pretty diverse range of offerings.
Yeah, it's quite the financial buffet. Savings accounts, checking accounts, fixed deposits, loans for just about everything, and of course, a heavy emphasis on digital banking.
Yeah, their website practically screams convenience. Net banking, WhatsApp banking, even missed call banking.
Yeah.
They seem to be targeting, those of us who are constantly on the move.
Which is a pretty smart strategy,
Yeah.
considering the increasingly fast-paced lives most people lead these days. But it also raises the question, would Graham, with his emphasis on deep research and careful consideration, approve of this level of convenience?
Good point. It's almost like there's a tension there, isn't there, between making financial services readily available and ensuring that people aren't making, impulsive decisions.
Exactly. I think Graham would argue that convenience shouldn't come at the expense of prudence.
So how do we reconcile these seemingly conflicting ideas? How can we be both, tech savvy and intelligent investors in the Graham sense?
Well, let's start by looking at how some of AU's specific offerings might align with Graham's principles. For example, he was a big advocate for investing in bonds because of their predictable returns and relative safety.
And that makes me think of their fixed deposits. You lock in a fixed interest rate for a set period of time, kind of like a bond, right?
Precisely. While not identical, they share that underlying principle of seeking stable, predictable returns. It's a way to protect your capital and generate a steady stream of income.
So that's one potential connection, but what about stocks? Graham was all about picking individual stocks based on in-depth analysis. How does that fit into AU's offerings?
Well, they do offer mutual funds. Now, Graham was a bit wary of actively managed funds, where you're relying on a fund manager's stock-picking skills. He believed that individual investors, armed with the right knowledge, could often do better on their own.
But wouldn't he have been a fan of index funds? The ones that passively track a specific market index?
That's where it gets interesting. Index funds weren't really a thing back in Graham's day.
Mhm.
But I think he would have appreciated their low fees and their ability to deliver broad market exposure. In a way, they align with his idea of diversification.
So even though AU offers both actively managed funds and index funds, a true Graham disciple would probably stick with the index funds.
Most likely. They offer that balance between diversification and a hands-off approach.
Okay, I'm starting to see how some of the pieces fit together, but there's one thing I'm still curious about. The AU Royale program. It's this premium service with exclusive benefits for certain customers. What do you make of that?
It's an intriguing element. It seems to be targeting a more discerning clientele, perhaps those who are more actively involved in managing their wealth.
So maybe it's aimed at those intelligent investors who want more personalized services and insights.
It's possible. It'd be interesting to delve deeper into the specifics of the Royal program and see if it offers any features or tools that might resonate with a value investing approach.
We've been talking a lot about the potential alignment between AU Small Finance Bank and Graham's principles, but there's also this underlying tension,
Are
right?
you referring to the convenience factor again?
Exactly. On the one hand, their digital focus makes managing your finances incredibly easy. But on the other hand, could that ease of access lead to impulsive decisions?
It's a valid concern. Graham was all about being deliberate and avoiding emotional reactions in the market. He probably cautioned against making investment decisions based solely on what's convenient or trendy.
So, what's the takeaway here for our listener? How can they navigate this complex landscape and make informed choices that align with both their needs and their investment philosophy?
I think it boils down to a few key points. First, don't be afraid to embrace technology. It can be a powerful tool for managing your finances and staying informed.
But always use it with a critical eye. Don't let convenience override your due diligence.
Right. Remember Graham's core principles. Do your research, understand the risks, and don't chase quick profits. And perhaps most importantly,
Think for yourself. Don't blindly follow the crowd or get swept up in market hype.
exactly. Whether you're exploring fixed deposits, mutual funds, or even those fancy Royale perks, approach your financial decisions with a healthy dose of skepticism and a commitment to long-term thinking.
I think Graham would approve of that approach. Now, before we wrap up, I want to circle back to something we touched on earlier, this idea of ownership. Graham believed that a stock wasn't just a ticker symbol on a screen. It represented a piece of a real business.
That's a crucial point, especially in today's world of instant transactions and algorithmic trading. It's easy to lose sight of the fact that you're not just buying and selling numbers. You're investing in companies with real products, real services, and real people behind them.
So the question for our listener is this. In a world dominated by digital convenience, can that sense of ownership still exist? Can you be both a tech-savvy investor and a truly intelligent one in the Graham sense?
I think the answer is a resounding yes, but it requires a conscious effort. It means looking beyond the flashy interfaces and the promises of quick returns. It means understanding the businesses you invest in, believing in their long-term potential, and holding on to them through the inevitable ups and downs of the market.
And that, my friends, is the essence of being an informed investor in the 21st century. It's about taking the best of both worlds, the enduring wisdom of the past and the powerful tools of the present, and forging your own path towards financial success.
So as you continue your deep dive into both value investing and AU Small Finance Bank's offerings, remember to stay curious, question assumptions, and above all, think for yourself.
Thanks for joining us on this deep dive into the world of value investing and AU Small Finance Bank. We hope you found it insightful and maybe even a little bit inspiring.
Until next time, keep learning, keep exploring, and as always, happy investing.
Well, it feels like we've covered a lot of ground here, from the fundamentals of value investing to the nuances of AU Small Finance Bank's digital offerings.
Yeah, it's been quite the journey, hasn't it? We've explored those timeless principles of Benjamin Graham and tried to see how they might apply to a modern financial landscape he could have scarcely imagined.
And I think the key takeaway here is that while the world of investing has certainly evolved, those core principles, thorough analysis, a margin of safety, a long-term perspective are still incredibly relevant.
Absolutely. Whether you're considering a fixed deposit with its predictable returns, an index fund that mirrors the market, or even, diving into individual stock picking, those principles can really guide your decision making.
And it's that emphasis on informed decision-making that connects a 1949 investing classic to a modern Indian bank.
It's about empowering yourself with knowledge, understanding the risks and rewards, and making choices that really align with your individual goals and risk tolerance.
So as you continue your exploration of both value investing and AU Small Finance Bank, remember that it's not about finding a one-size-fits-all solution.
Right. It's about taking the time to understand the principles,
Yeah.
applying them to your specific situation, and making thoughtful choices that set you up for long-term financial success.
And who knows, maybe that's what being an intelligent investor in the 21st century is all about.
It's about, blending the wisdom of the past with the tools of the present and navigating the complexities of the financial world with, both confidence and a healthy dose of skepticism.
Well said. Thanks for joining us on this deep dive into the world of value investing and AU Small Finance Bank. We hope you found it insightful and maybe even a little bit inspiring.
Until next time, keep learning, keep exploring, and as always, happy investing.
Hey everyone, and welcome back for another deep dive.
Excited to be here.
This time we're going to be looking at value investing with the classic book, The Intelligent Investor, by Benjamin Graham.
Oh, a fantastic choice.
Yeah, and we're also going to be taking a look at AU's Small Finance Bank and the services they offer.
Sounds good.
We've got excerpts from the book itself, some interesting reviews and blog posts that we found,
Great.
and then obviously we'll be taking a look at the bank's website.
Excellent sources.
Yeah, it should be pretty interesting to kind of see how all this stuff connects together.
Yeah, looking forward to it. It's interesting because I think we can tie a lot of the investment principles from that book into the modern services that a bank like AU Small Finance offers.
Yeah, for sure. So, okay, let's start with The Intelligent Investor.
Okay.
This book is like legendary status.
Oh, absolutely, yeah.
Even Warren Buffett says it's like the best investing book ever written.
It's a must-read for any investor.
So what is the big deal about value investing? I mean, what is it really all about?
Well, at its core, value investing is about finding those stocks that the market might be undervaluing.
Okay, so like hidden treasures, kind of.
Exactly, like hidden treasures.
Yeah.
It's not about, chasing the latest trends or getting caught up in all the hype.
Right, so less FOMO, more like doing your research.
Exactly.
Yeah.
It's about really understanding the business, the fundamentals, like their assets, earnings, dividends, their potential for growth.
So instead of just looking at like, a ticker symbol on a screen, I should be thinking like, would I want to buy this entire company?
Precisely. You need to think like a business owner.
Okay, I like that.
Now, Benjamin Graham, he introduced some really important concepts in the book that can help investors, with that kind of evaluation.
Okay.
Have you ever heard of the margin of safety?
I feel like I've heard of it, but I don't really remember what it is.
Okay, well, it's the idea that you should be buying stocks below their intrinsic value. So their actual worth.
Okay.
That difference, that discount, it acts like a buffer against potential losses.
So it's like a safety net in case like the market, takes a dip or something.
That's a great way to put it. It's like a buffer or a cushion.
Okay.
Then there's the concept of Mr. Market.
Mr. Market. Who is this guy?
Well, Mr. Market is how Graham personifies the stock market. He's known to be a bit moody.
Yeah.
He swings from like wild optimism to like really deep despair.
Oh, so he's kind of all over the place.
Yeah, and often acting irrationally.
That sounds stressful.
Well, the point is a smart investor doesn't let Mr. Market's mood swings control their decisions.
Okay.
So, like when everyone is panicking and selling, a value investor would ask, has the intrinsic value of the company actually changed?
That's a good point.
And if it hasn't, then that might be a good opportunity to buy.
Don't let your emotions get the best of you.
Right. Emotions can be a dangerous thing when it comes to investing.
Okay.
Now, Graham also talked about two different types of investors,
Yeah.
the defensive investor and the enterprising investor.
Okay, tell me about these two. Which one am I?
Well, the defensive investor is someone who's a little bit more risk averse.
Sure.
They prefer a simpler approach, maybe focusing on a diversified portfolio of index funds,
Mm.
whereas the enterprising investor is willing to put in more time and effort.
Oh, okay.
They're actively seeking out those undervalued individual stocks, doing deep company analysis.
Okay.
So one better than the other?
Yeah, is one better?
Not necessarily. It really depends on your personal circumstances, risk tolerance, and how much time and effort you're willing to put in.
That makes sense.
Both can be successful if done right.
Now let's address the elephant in the room.
Okay.
This book was written in 1949.
Yeah, it's an old one.
Does it even still apply today?
Well, that's a great question.
Yeah.
Some people argue that certain aspects might be a little outdated,
Okay.
especially when you think about all of the, modern companies and how much the financial world has changed.
Right.
However, I think the core principles, like focusing on fundamentals, avoiding emotional decisions, and having that long-term perspective, those are still as relevant as ever.
Yeah, I could see that. It's like fashion, trends come and go, but certain style principles are kind of always there.
Exactly. The fundamentals never go out of style.
Okay, so speaking of fundamentals, I know Graham gives some formulas to calculate a stock's intrinsic value.
He does.
I'm not a math person at all, so can you just give like the main takeaway there without getting into all the numbers?
Sure, yeah, you don't need to be a math whiz.
Okay, good.
The main point is that he provides concrete, methodical ways to try and estimate a stock's worth.
Okay,
So it's about taking emotion out of the equation and really looking at the numbers.
got it. Now, you also brought some book reviews and blog posts.
I did.
What were some of the key takeaways from those?
Well, a lot of them emphasize the importance of patience and thinking long-term.
Okay.
One of the reviews said that, statistically speaking, the less you tinker with your portfolio, the better off you'll be in the long run.
Oh, that's going to be tough for me.
It's hard.
I always want to react to every little thing that's happening.
It's tempting, but that can actually hurt your returns
Mm.
because of transaction costs and taxes and all that.
Okay.
Sometimes it's better to ride out those short-term ups and downs and think about where you want to be years down the line.
Long-term vision.
Exactly. Another point they made was about staying objective and not letting emotions drive your decisions.
Oh, that's easier said than done.
Oh, absolutely. One blog post even said to avoid speculation driven by fear or greed.
Yeah. We all know Mr. Market is emotional, right? But we don't have to be.
We can be the calm in the storm.
So how do we avoid getting swept up in all that?
It's about doing your own research, carefully evaluating a company, and not letting all the hype of the market, cloud your judgment.
Don't get caught up in the hype.
Yeah, it's easy to do, but you got to stay focused.
Okay.
There was also a point about understanding historical context, but being adaptable.
So don't just get stuck in the past.
Exactly.
Yeah.
What worked, decades ago might need some tweaking today.
Okay.
Markets evolve.
Hmm.
New technologies emerge, new industries pop up.
Right.
So the key is to learn from the past, but stay open to new possibilities.
It's like history. Study the past, understand the present, and prepare for the future.
That's a great way to put it. It's about finding that balance between learning from the past and adapting to the present.
Wow. I already feel like I'm thinking about investing in a whole new way.
It's a journey.
No,
It is a journey.
there's always more to learn.
Always more to learn, that's for sure.
Absolutely.
And we're back. So we just finished exploring some of those fascinating concepts from The Intelligent Investor by Benjamin Graham.
Some really great stuff in that book.
Yeah, for sure. So now let's switch gears a little bit and talk about AU Small Finance Bank.
Okay, sounds good.
I'm really curious to see if we can connect any of those principles to the services that they offer.
Yeah, I think we can definitely draw some parallels there. Okay, so first of all, just looking at their website, I'm really impressed with the variety of services that they offer.
Yeah, they have a lot going on.
It's like a one-stop shop for all your financial needs.
Right.
They have everything from basic savings accounts to loans, insurance, even investment options.
It's a pretty impressive portfolio.
It is. And they seem to cater to a really wide range of customers, right?
Yeah, they do individuals, businesses, agricultural clients.
So they're really trying to reach a broad audience.
It seems that way.
Okay, so let's break down some of what they offer.
Okay.
Let's start with savings accounts.
All right.
I know they have a bunch of different options.
Yeah, they do. They have the AU digital savings account, which is probably good for people who, prefer to do everything online.
Yeah, that's me for sure.
Then they have AU Royal, which looks like it comes with, some extra perks and benefits.
So fancy.
They even have accounts specifically for women, senior citizens, and students.
Oh, wow. So they really have like a tailored approach for different groups of people.
It seems like they've really thought about, what different demographics might need.
Yeah, I like that.
Mm.
Okay, what about fixed deposits?
Fixed deposits. Yeah,
Yeah.
those are always popular, for people who are looking for a relatively safe way to earn some interest.
Yeah, for sure.
And AU Small Finance Bank, they seem to have some pretty competitive interest rates.
Yeah, okay.
They even have this Planet First green fixed deposit option.
Oh, what is that?
Yeah, it's for people who, want to invest in a more sustainable way.
Oh, I love that. I'm all about those sustainable options.
Yeah, it's great to see companies offering that kind of thing.
Okay, so now let's talk about current accounts for all of our entrepreneurial listeners out there.
Right.
What do they have for businesses?
Well, their main thing is this AU Royal Business Program.
Okay.
It looks like it has a lot of features, and then they have some variations that are tailored to specific types of businesses,
Oh, like what?
like ones for doctors, agribusinesses, contractors.
So no matter what kind of business you're running, they probably have an account for you.
Most likely. Yeah, they seem to cover a lot of bases.
Okay. And then, of course, they offer loans too.
Right. Loans are a big part of what they do.
Yeah, and that can be such a big decision for people.
Absolutely.
Whether it's for a home or a car or to, fund their business.
That's a big commitment.
So it's good to see that they have a lot of different options.
Yeah, they have home loans, car loans, gold loans, business loans,
Right.
and really emphasize how you can, track your loan application online.
Oh, that's super convenient.
Yeah, no more waiting around wondering what's going on.
I hate that.
Yeah, it's a much better system.
Okay, now this is where I think things get really interesting.
What's that?
Their digital banking options.
Oh, yeah. They're really impressive.
They have the AU0101 app, net banking, video banking.
It's pretty cutting edge.
Wait, video banking, is that like you can talk to a banker through video chat on your phone?
That's what it sounds like.
That's amazing.
They're really embracing technology.
Yeah.
And on top of all that, they even have WhatsApp banking and missed call banking.
Missed call banking, what is that?
You can just give them a missed call, and apparently they'll handle your banking for you.
No way. That's incredible.
Technology is wild.
It is. It's amazing how much easier they've made banking,
It really is.
Okay, so we talked about savings accounts, we talked about loans,
Uh-huh.
we got to talk about insurance.
Yes, insurance. That's a key part of financial planning.
For sure. And it looks like they have a really comprehensive offering of insurance products.
Yeah, they do. They have life insurance, health insurance, motor insurance, even some Social Security schemes.
They have everything.
Pretty much.
Okay, and then finally, let's touch on investments.
All right.
I know a lot of our listeners are probably interested in that,
Yeah, for sure. People are always looking for ways to grow their money.
So what kind of investment options do they have?
They have mutual funds, which are always a good option for diversification.
Okay.
And then they have something called the AU Select List, which looks like it's more personalized wealth solutions.
Personalized. That sounds interesting.
Yeah, it does. It seems like it might involve some financial advice and planning.
Oh, that's cool.
Yeah, it could be a good option for people who are looking for more guidance.
Okay, wow. We really covered a lot of ground here.
Yeah, they really do have a lot to offer.
I mean, it's clear that AU Small Finance Bank has a wide range of services to meet a lot of different needs.
They really do.
And I think it'd be interesting to think about how some of those value investing principles that we talked about earlier,
Yes.
could be applied to the choices that we make when we're using these services.
That's a great point. I'm curious to hear your thoughts on that.
Yeah, me too. But before we get into that, what stood out to you the most from everything we just talked about?
That's a good question.
Yeah.
I think for me, it's how they've managed to combine traditional banking services with, all of this new technology.
Yeah, they seem to be embracing innovation while still, keeping that focus on customer service.
Right. And they have physical branches too. So, if you're someone who likes to go in and talk to someone face to face,
Yeah, they have that option too.
it's a good mix.
Yeah, I agree. And they're clearly targeting a diverse clientele,
Definitely.
which I think is really great. It's like financial inclusion.
Everyone's welcome.
Yeah, exactly. No matter where you are in your financial journey.
Right. They're there to help you along the way.
Love that.
Yeah, it's a good message.
Okay, so we've explored the world of AAU, Small Finance Bank, and we've got all these value investing principles, floating around in our heads.
Yeah, it's a lot to take in.
So now in part 3, let's bring it all together
Okay.
and really see how we can apply these ideas to our own lives. I think this is going to get really interesting.
It's going to be thought-provoking for sure.
All right, we are back for the final part of our deep dive.
The grand finale.
I know, it's amazing how we went from like all those value investing ideas from the intelligent investor
Right.
to talking about, a modern bank like AE Small Finance Bank.
Yeah, it's been quite a journey.
So now I think we should try to challenge ourselves and our listeners to actually take those value investing concepts
Yes.
and apply them to other areas of our lives.
I love that idea.
Like, what if we expand that definition of being like an intelligent investor
Right.
beyond just, stocks and finances?
Exactly, because a lot of those principles can be applied to so many different things.
Okay, so thinking back to those hidden gems we talked about with stocks,
Yeah.
what are some other hidden gems we might find in our lives
Good question.
if we use that same kind of value investing mindset?
Okay, well, let's start with career choices.
Okay.
A lot of people just chase the highest paying job or the most prestigious title.
Right.
But what if instead of doing that, you focused on finding a role that really aligns with your values? One that offers, opportunities for growth, maybe even a sense of purpose.
Okay, so instead of getting caught up in the hype of a certain career path,
Yeah.
we should be thinking about its intrinsic value to us, like how fulfilling it would actually be.
Precisely. And just like you'd want a margin of safety with your investments,
Yeah.
you might want to think about, a career path that offers some stability,
Okay.
some resilience,
Yeah.
in case things change unexpectedly.
So it's like having a backup plan, kind of.
Right, or like diversifying your income streams.
Okay, I like that.
And remember how Graham talked about the importance of the long game?
Yeah.
Applying that to your career could mean investing in yourself,
Okay.
developing your skills, building relationships, working towards your goals.
Even if it takes time.
Exactly, even if it takes time. Patience is key.
That's a good reminder for me.
It's easy to get impatient,
Very impatient.
but sometimes those most fulfilling paths, they take a while.
They do. They do. Okay, so we talked about careers.
Yeah.
What about relationships?
Oh, relationship.
Could we use a value investing mindset for how we approach, friendships and family and all of that?
I think so. Think about the people in your life who bring you joy, support, encouragement.
Hmm.
Those are like the blue chip stocks of your social circle,
Oh, I like
the ones that you can always count on.
Yes.
And you'd want to diversify your investment portfolio.
Yeah.
It's important to have a diverse network of relationships.
Okay, so it's not just about having one or two really close friends.
No, it's about having a variety of people in your life.
Okay.
People who challenge you, inspire you, offer different perspectives.
So you're building a strong relationship portfolio, basically.
Exactly, one that supports your overall well-being.
I love that. Okay, now here's a tough one.
Okay.
How do we apply this to our everyday purchases?
Ooh, that is a tough one.
I mean, it's so easy to just buy things on impulse.
Especially these days with all the online shopping.
So true.
Yeah.
So how do we resist?
Well, what if before you buy something, you ask yourself, does this really align with my values? Will this actually add value to my life? Or am I just getting caught up in the moment?
So it's evaluating the intrinsic value of a purchase.
Yes. Instead of its perceived value or the hype around it.
Okay. And could we also look for a margin of safety when we're shopping?
You could. Maybe that means looking for ways to save money
Okay.
without, sacrificing quality.
So comparing prices, being a more mindful consumer.
Exactly. And, Graham talked about thinking long term.
Yeah.
So maybe sometimes it's better to invest in higher quality items, even if they cost a bit more upfront,
Okay.
because they'll last longer and you'll save money in the long run.
That's a good point.
Yeah.
I do tend to buy the cheaper option, even if I know it won't last as long.
It's tempting, but sometimes that long-term thinking can save you money.
Wow, this has been so eye-opening.
It's amazing how these principles can apply to so many areas.
It really is. I feel like I'm looking at everything differently now.
That's the goal. It's about making intentional choices,
Yes.
thinking critically about what matters to you,
Uh-huh.
and aligning your decisions with your goals and values.
And like any investment strategy, it takes practice.
Oh, absolutely.
Patience and a willingness to learn.
It's a journey.
Well, this has been an incredible deep dive. I hope everyone listening is feeling inspired
Me too.
to apply these ideas to their own lives, not just their finances.
It's about being an intelligent investor in every sense of the word.
That's a great way to put it. So thank you all for joining us on this journey.
It's been a pleasure.
Keep those brains engaged, keep seeking those hidden gems.
Yes.
And we'll see you next time for another deep dive.